Hello, and welcome to Donatian Investment. This analysis is for Comfort Systems USA on the New York Stock Exchange as of 15th of August 2026 with a share price of $1,774. The full report is on donatian.ca. Whoa. 43.63x trailing earnings against a warranted 16-point NYSE keeps the valuation ceiling gate triggered, and a more than 9.9% base case is not compensation for a minus 39.1% tail. There is no new fundamental information in this cycle, and it is worth saying so plainly rather than manufacturing a development. The second quarter results were filed on the 23rd of July, 2 days before the last report, so they were already in it. What moved was the tape. The stock fell a further 12.3% to close at $15.1996 on the 29th of July, then recovered 16.7% close to close on steadily higher swing lows with momentum positive for 10 consecutive sessions. Timing rose 25 points on that alone. The other four pillars moved by 5 points or less between them. On the business itself, the retest came back 1 point better at 86. Return on invested capital is around 44% against a cost of capital of 11.13. Revenue grew 50.3% year-on-year and diluted earnings per share 91.9. The balance sheet carries $1.8 billion of net cash and interest cover of 196 times, and the backlog is $14.06 billion, up 73%. Of which 97% is same store rather than acquired, roughly 15 months of signed work already booked. Nobody disputes the quality of this business. That is not what the signal turns on. Now the part that has not moved. The valuation ceiling gate was rerun and still triggers 43.63 times clean trailing earnings against a warranted 16.9, a ratio of 2.58. The industrial's guardrail sits at 23 times and is cleared on the trailing multiple, on this year's forward and on next year's alike, so the expensive band does not depend on our discount rate. More importantly, the deep expensive do not buy prohibition was re-adjudicated. Both of its numeric legs are satisfied, and the only thing holding the prohibition off is the carve-out for exceptional proven durable growth. That judgment rests on contracted backlog rather than forecast, and it is the most load-bearing call in the report. The bear needs any two of three things. First, the cohort D rating. This is a genuine member of the artificial intelligence CAPEX cohort, so it inherits a multiple compression from 43 times toward 20, which on reduced earnings is 1080. That is a 40 to 50% move, not a wobble, though the macro report has the trigger currently receding as market breadth broadens, which is why it carries 20% rather than a prohibition. Second, a hyperscaler CAPEX pause. The calibration for that is the late July episode, minus 12.32% across 3 sessions on sector-wide CAPEX scrutiny, not on anything the company did. Third, competitive margin compression as rivals bid the same campuses. And a standing caution, 35 insider sales worth $152 million over 12 months against 0 purchases. Now weigh the risk against the reward. The bull case is roughly 35% above today, the base case, the most likely, about 10%, and the bear case a fall of about 39%. So you are risking about 39 to make 35. So, our call on Comfort Systems USA on the New York Stock Exchange, hold on all 3 horizons. Remember, this is for education, not financial advice. Always do your own research. This analysis is by Donatian Investment at donatian.ca. The link to the full report is in the notes below. Have a great day.